Well, thank you for taking the time to listen to this video. I'm Tom Perrone. What if you had a business that you thought was worth $10 million, only to find out when you did an actual valuation of your business, a formal evaluation, it came to $5 million. You just lost $5 million that you assumed. At least that was your perception. In this video, we're going to talk about how you make sure that you get your $10 million and not lose $5 million. Today is about the buyer's value most when purchasing your business. The goal is to build a business that can sell for a premium and do all the things that will build the multiples of your business. Again, I'm Tom Perrone, founder of New England Consulting Group, and for 50 plus years, we've been sharing with business owners financial clarity so they can enjoy what they're building. Much of what we discuss today is about value drivers in a business. Now, the buyers pay for certainty. That's very important. Predictable cash flow, stable earnings, reliable financial reporting, and low risk. Buyers pay more for the confidence of it when they take over your business, that things are in place and they can make money. And we're going to talk about quite a few of the value drivers that really make a difference in the multiples or the value of your company in the future. Again, on one video we did on the asset gap is each owner at some point is going to leave their business, either through death, disability, retirement. Much of their asset base is in their business. It's important that they understand they need to get that asset base out to enjoy a retirement. And of course, as we've talked about, when you sell your business, you have capital gains, taxes, commissions, the whole deal. So we're talking net amounts. Now, is the business dependent on you? That's one of the first things when I talk with business owners and consult with them in our planning is, can you run it without the owner? Do you have a job, a place to go, and a paycheck, but you don't have a business because it doesn't run on its own? Will customers stay? Will employees stay? These are big questions that the owner or the purchaser wants to know. And, one of the things I did when I was in practice full time and not just consulting was I was able to run my business on 80 days a week. 80 days a year, and make my revenue 80 days a year because I had a process. I had systems. I have a client that right now runs $2 million companies, and he works 20 hours a month. So it's possible to build a company where it runs itself. And these are the questions that a purchaser is going to ask. One of the biggest things is in looking at a business as a purchaser, you'd want to know, are the books clean? Are they real? Just by telling some purchaser that we do X amount of dollars consistently, well, that's fine, but let's take a look at the reports. Are legitimate? Do you have monthly reports that a purchaser can count on? We call these clean books. Accurate statements, documented earnings. Because that's the thing that a purchaser will pay for if they're convinced that everything that is being told to them is legitimate. Great management creates premium value. Now, one of the big value drivers that I have seen over my years of practice is middle management. The middle management group, the key people, because they do a lot for the company. They may be the most valuable of all the assets. They're the leadership team. They account for things. They think like an employer. That's the mentality. they do a great job and they build, and they're the lifers, they'll stay. They, in turn, not only do they stay, but because of that middle management culture, the employees stay. So consequently, by 1, 2, and 3 here, you have a very good succession planning model. Because even if a purchaser doesn't come along at your price, you might have a group of employees who would definitely want to purchase your business, or you've built a business strong enough that you could possibly set up an ESOP. So people build transferable businesses, and that's why I say I think the key group, the key management is worth the time and investment. And mostly it takes that element to create a wonderful culture. Now, systems reduce risk. That's a good statement, because really systems are all those procedures for any particular part of the business. There's a lot of different systems, but for systems to really work well, they have to be written. Technology has made this much easier, and they should be based on technology. You know, nobody wants a scrapbook, although that would be better than nothing. Training manuals, because when you bring people in, they need to learn these procedures under their systems. So training manuals will be important. Remember, a new purchaser, they're not going to come into your business and normally spend the time there. They're going to hire people, and they're going to make sure the people that stayed are obviously doing the procedures of the systems. Repeatable processes, that's really, really important. McDonald's French fry, that's the first thing I think about, is the McDonald's French fry. They taste exactly the same no matter where you go in the country or the world. And again, that's what you want. You want repeatable processes. Now, diversification of revenue is really, really important. You know, if you have like one, I had a client who had one client, which was a state organization, gave them about 80% of the revenue. And they had, you know, they had suppliers, but again, in this case, if you have one supplier and one salesman, this is not diversification. You need a spread out of customers, you need a number of suppliers, and you need more salespeople and people you can depend on to be out there. Because this is really what a purchaser scares the most, is when they buy, they write their name on this note, and then they find that people leave, the supplier folds, and the customer leaves. A nightmare. So buyers purchase growth. Any purchaser is going to look at a company and say, okay, is it stabilized? Are there expansion opportunities? You know, are there new markets that they could go to with this product, with these services? Can they improve the margins? Now, I have a client that is improving their margins over the next 6 years, going from 11% to 15%. And again, it takes time to put these things in, but it's on the chalkboard, and it's really one of these projections that we're working with. So again, we know that down the line, the future profits will be better. So these are the growth patterns of companies in which purchasers want to see clear opportunities of expansion. Now, I've given you a number of things here to think about, and I've touched on them. But I do have down below, I have a great written report for you that covers this and other details. And I suggest that you download that, enjoy it. And if you like what we've been doing, please like us, subscribe. We come out a couple times a month with some nice videos on how business owners can run their business and grow. And I have the business viewpoint you see here. Now, this is a very important tool. It's called the 3-Minute Business Owner's Viewpoint. And what it does In 3 minutes, it gives us enough information about what you're thinking to put together a report, which we call the Where You Are report. And the Where You Are report is really, before you can do any planning and make things better, you got to know where you are in the planning. And in many cases, people have done planning, but because of their personal and business changes and Washington's changes, what they've done in the past is probably outdated. And in many cases, if you did planning before January of 2026, your plan is already out of date because of the tax law change. Also, there's a great video coming up next that if you click it, it'll give you more information on building your business, creating compensation for yourself, and creating more wealth through your business. So I do want to thank you for visiting with us today. So here are the elimination of deal killers: legal issues, poor contracts, tax problems, environmental risks. Remove the surprises before they find them. So in other words, be prepared. When you're ready to go to market and exit and transition your business, you want to be aware of those 4 areas. You want to build a business worth buying. If you were going to buy your business, you would be looking at the same things: the predictable profits, documented systems, independence from the owner, strong leadership, and growth opportunities. We developed the GWT System, which is a system, a very brief system to keep business owners up to date on where they're going in the future, keeping them planned so they're not out of date in all aspects of your business. So again, I do want to thank you for taking the time. I'm Tom Perrone, New England Consulting Group.